Hey guys, Mike here. So, oh boy, what a day in the market, and more red and more, oh, are we going to get rate cuts in June? I'm not sure. And of course, we talked about yesterday, for those who watched, the repricing, right? Every time we go through this, have we seen this movie? Have we seen the end of it? We have to reprice and go, okay, now where do we need to be right now? Okay, before we either start to move higher or sideways. What needs to happen here, okay? And so we're going to go into that. We're going to go into what's happening with these jobs reports behind the scenes right here. We're going to go into what's flying all over the internet about these rate cuts. Oh, well, other countries are cutting rates. Well, why are they cutting rates? And on this channel, if you want the truth, stay around. I'm going to get through this. This is a jam-packed video. I'll get through as fast as possible. It's not a 20, 30-minute videos. I don't do those. If you don't want the truth, there are plenty of channels out there that will make you feel good about things, okay? And lie to you and sell you products, okay? This ain't one of those channels. So hang around if you want the truth. If you don't, I don't understand. Click one off, okay? We're going to go into all that. Plus, I'm going to show you these charts. And you saw a major sell-off in the morning, okay? And why did they bounce? And I'm going to show you exactly why Nvidia and Tesla and the SPY and IWM, why all of them bounced where they did, all right? I'm going to blow your mind. If you've been a part of this channel for long enough, I've told you to learn what this is, okay? It'll change your life and how you look at charts, okay? So I'm going to show you that. So let's get into what is happening, because we had the JOLTS job report come out this morning. It was in line or above expectations, right, with these job openings and job quits and stuff. But what's happening behind the scenes? What are you seeing? You'll get the JOLTS jobs report and it looks all good, right? Then all of a sudden they'll come back and revise it down, and revise it down a lot is what's happening. 12 of the last 14 job opening reports have been revised lower after the fact, right? And you can see it on the chart right here. Look at all those red bars at the bottom. But when they come out, it's like, oh, it's in line, it's above, it's all good, and then bam, they end up knocking it down. And this thing goes back to 2011. Do you see any other instance of this many times? Nope, surely don't. Now, of course, people can speculate and say certain things. I have no proof of anything. But just understand, because most people are going to see the headline. They're not going to see the revisions. We've covered this a couple times. Every time they do it, we talk about it, right? But they keep revising this down. Now, why are stocks maybe pulling back? Not just because of rates, or there might be any rate cuts, but look where you're at. This is the AAII stock fund allocation, right? Look at the level it is at right now. You look down at the bottom of the dates. That was the dot-com bubble, right? The other one was the 08 crash. You go over, that was a 2018 crash. Not that we're going to crash or anything, but even in there, you see pullbacks, right? You're at that level where a lot of people are in, like everybody's getting all FOMO and stuff like that or whatever, but these are the funds, okay? When they get this level, this is where you can see the stock market trade sideways. It can do a pullback. This kind of stuff can happen. These are the levels you see this stuff, all right? And on top of it, oh, we're going to get a June rate cut, right? Now, this is all over Twitter, blowing up, and everywhere else seems like. I hear them talking about it. So let's set the record straight. 55 global rate cuts in the past 6 months, okay? That's what you're seeing. But here's the thing. Why are they cutting? Why are they cutting? Here's why they're cutting. Because you can see just in February, Japan and the UK found themselves in recessions, joining Finland and Ireland. But it's not just them, okay? When you're going off GDP here, look at this map. 20 countries are at risk of economic recession. This is at the beginning of this year and stuff. And you can see quite a few, right? Negative GDPs going on here. And so this is why they cut, all right? And we need to understand and set the record straight on, what do rate cuts do? A lot of people believe rate cuts are what caused the recession, right? And the Fed cuts, and then all of a sudden we have a recession. That's what happens. That is not at all what happens. Here's the truth about rate cuts. And before we continue, please hit that thumbs up for me and think about subscribing. If you like this kind of content, I do daily updates, and then Saturday videos will answer all your questions in the comments and stuff. Thank you very much for your support. And it's important to understand, when the Fed cuts rates, that does not cause a recession. A lot of people say, oh, when they start cutting, the recession happens. They're trying to avoid a recession. The problem is, why are they always late on cutting? What did I just show you in the beginning of the video with the jobs report stuff? Their data is either old or is inaccurate. The way they collect data is absolutely shameful, okay, especially in a day and age. I understand the 70s and 80s. This day and age, with all the technology we got and the data they get, is so either old or outdated or inaccurate, it is ridiculous, okay? Look how they collect real estate data and rents and all this other stuff. It's a mess. And so by the time they start cutting, it's already too late. The snowball's going down the hill. That's why like 95% of the time or something, they're too late. We end up in a recession, right? Whether it's mild, who knows, whatever. But that's why they were cut. That's why these other countries have already started to cut, right? But here, our economic data, again, we can just go off the data in front of us. All right, again, I do a members video every month on this, looking at a bunch of different data, okay? And our data looks a little different than theirs, obviously, because, I mean, that's the way it is, whether it's inaccurate or not. I don't know. I can only go off what I have, okay? And by the way, I will correct something at the end of this video, because some people in the comments were accusing me of some stuff, and I'm going to go ahead and correct that at the end of the video, okay? But, of course, what are you seeing as we're repricing stuff? You saw an across-the-board sell-off besides what? XLE. Again, I told you, get your pocketbooks ready. You're fixing to start paying more for gas because oil prices are up. XLE is breaking out even on a red day, okay? Now, what's the S&P do today? Went below the weekly moving average, fell below 5,200, which is a key level, okay? But it got back above it. This is what happens when they get these expected moves. Sometimes they'll push it back up, especially on key levels right there. Again, remember, it's always a soap opera. We got to have a cliffhanger here and there, okay? But understand, what are we doing here? Even if it falls to that level right there, right? That's where the 50 moving average is sitting around right there. That also is where some support where we've seen buyers come in before, okay, or in the past, okay? And so understand that's only like a 4.2% drop from the top. That's not even 5%. But also understand, look at this, guys. This is a weekly chart of the S&P. Again, I've showed you this before. You'd be hard-pressed to find more than 3 or 4 occasions on this one in the entire stock market's history. All right, that is a lot of green weeks. And understand this. When you see the S&P 500 up 10+% in back-to-back quarters, which is what we had, you can see right here, 1 month out. Look over there, 1, 2, the 4th column over. Even if you go all the way back to 1954, one, it's only happened 8 times. 8 times in the history. In my lifetime, it only happened, what, 5 times since I've been born. How about you? Put in the comments. But you can see, whether you go back to the beginning of history, it's less than a 50% chance 1 month later S&P is green. If you go just from the 21st century, that means you only get 4 instances, really 3 that's happened. It's a 33% chance it ends up green, okay? Because why? People are profit taking. The markets move too fast, right? And so, again, now you go 3 months, 6 months, 1 year, much better, much higher chance it's going to be green, of course, all right? But just understand when it moves this fast, it's okay to have pullbacks. It's okay. Now, why the S&P 500 stopped where it did and bounce is right here. I'm telling you, learn fair value gaps. It's not about just fair value gaps. You don't pick them at random. You look at a key level to be broken. What got broken? It was the prior week's low. Okay, you look prior week's high, prior week's low, prior day's high, prior day's low, prior month's high, prior month's low. These are key, right? When that broke, you look for a fair value gap right underneath it, and usually you're going to get a bounce. Whether that will hold tomorrow, we will find out. Okay, that's what we're going to find out. But that's when you'll start to see bounces start to happen. This is on a daily. Okay, so the higher time frame, the better. Now, then we look at IWM, which is the most rate sensitive. Okay, and when you look, it fell below the weekly expected move. It closed below the weekly expected move. It did not hit this trend line. Bearish MACD cross on the daily. When this has happened in the past, you've seen anywhere from 5 to 10%, as you can see right there, the last couple times. And currently, as we look at it right now, we're currently down around 3.8% as I'm recording this. If it hits that trend line, that'll put it close to 5 right there. We'll have to see. But again, if it goes down right there around 199.200, then we're over 5%, okay? So that would be a nice little pullback. But when you look, why did this one bounce? This had 2 things going on. Google this, okay? This had a fair value gap it came into after breaking a key level, like we just talked about, but it also had an inverse fair value gap right here, which acts as really good support. So if you have that combination going on, normally you will get a bounce. Again, is this going to hold? That's what we have to find out. So your homework, Google fair value gap, inverse fair value gap, what are key levels, okay? So that's where you're looking at to look at these for. But again, this is the most rate sensitive. So they want to push something down, they're going to push this one down because it's been performing pretty well for the last few weeks. Now, Tesla, terrible delivery numbers, horrific delivery numbers, okay? But what saved it? That trend line right there, and it got below the weekly expected move. It closed back above it, and it's this trend line right here. It's been in this channel since May of 2023. So in May, it'll be a full year in this channel if it stays in there. And so that saved it. Also, why did it bounce? That is just one confluence right there. And don't forget, by the way, we have earnings coming up on the 17th for Tesla, okay? Because in Q1 is usually not that great for it. Let's just be honest about it. I did a whole members video on this one. And go look yourself, pan out on a weekly, and you'll see what I'm talking about. And so when you look right here, what else happened? You had this RTH gap right here, okay? From March. Came down right there, boom. And that's where we ended up filling. That's a terrible job by me when we pulled that up. Filled the RTH gap in line, confluence with that trend line, got a bounce, held up the rest of the day. NVIDIA, you look at NVIDIA, this right here. If you're an NVIDIA owner, pull up a 21 moving average on this thing. 21 moving average. Hit the 21 moving average, bounced. That's what saved it last time on the very last sell-off, okay? Tends to like 21 moving average. This changes throughout time, but stocks should start to love something, right? And so that's the 21 moving average. It absolutely held. And so some people, they'll just pull it up, and that's what they buy on, right? They buy the dip. So it did bounce. Very nice recovery for this one. Could not get above that main resistance, which was support right there. But when you look, this is another one. What did it do? You can go on the hourly. You can go on the 2 hour. Again, breaks a key support right there. Breaks down. Okay, gaps down in the morning. What do you see to the left, right? You end up with a 2 hour or 1 hour fair value gap, however you want to look at it, and you get your bounce, okay? So not rocket science. Moves back up, cannot break back above that level, okay? And usually, you know, I know it's AI pump year, 2 years, whatever we're in now, but April is not that great for semis. And so, you know, maybe you finally get the weakness, but overall, look at it. It's still just in that channel right there. Now, AMD, this is another one. Always find what moves the stocks. The year-to-date anchor VWAP saved it again. This will be the 5th time, right? And just in the last few weeks, this has happened. It's right, almost dead in the middle of its weekly expected move right now. And again, it's not a great month for semis, but you know, this is what's holding this one up. So again, with each stock, you have to find what it respects. Each one of them are totally different. You pull, I was telling the members in the video today, if you pull the anchor VWAP year to day up on Google, it don't care about the anchor VWAP at all, right? But AMD, it's the MACD, and so far the year-to-date anchor VWAP for the last 3 years that usually shows you good support, good buying opportunity. Again, we'll see if weakness is going to continue on the semis or not. Now, comeback kid of the day had to be Palantir. I wasn't even going to talk about this one because the head and shoulders continue to play out, but this one got its bounce. You can see actually gap down 5% on the day. So we're just continuing that head and shoulders. But there's a reason why this one bounced. Why did it bounce? We're going to find out in just a second. And again, watch that 50 moving average. Yesterday, it bounced off of it. Today, it's kind of like right there at it. But what did this one talk? And we talked about this when the sell-off was going to happen, where we were going to go. And what happened was we use our fibs right here. You can see it, the 50 Fibonacci. Very, very powerful, right? This right here hit right on that 50 Fibonacci, and it bounced, right? And so we said, okay, are we going to go to the 50? Or are we going to go back down to the golden pocket like we did the last time we had the head and shoulders? Actually, it went all the way down to 0.79. But that 50 on the dime, on the penny, whatever it is. Some people don't believe in fibs, but they're actually a real thing. And it's a very powerful level. Boom. Ends up bouncing. So is that going to hold? Again, we're in this market weakness right now. Things don't go down every day, right? You might get a bounce tomorrow, and then we drop back down. So we'll have to see. Again, this head shoulder does not have to play out. So I said I know people who love Palantir, and they'll start dollar cost average in at the 50, and even dollar cost average all the way down to that 0.79. Okay, so that's what a lot of people are telling me they're doing. Now, in phase right here, watch this one because it's a super rate sensitive stock, but it's at this trend line or coming back down to it again where it's bounced multiple times. This is one of those high flyers, and anytime there's a rate problem and rates start going up, this thing sells off fast. But if we end up getting another bounce, telling you put it on your radar, you know, you can end up, you got to break that level. It's going to be really the key. But, you know, you end up moving up. This one moves pretty fast. All right. I think it's gone up like probably like 15, 16% in the last few days before this sell off with the rates. Now, understand, I do not make up stuff on this channel. So when I made a comment yesterday, and some people took offense to it because God forbid you ever mention Trump's name or anything else, that I said, Jay Powell, I don't know if this man's fighting for a job, whatever, but I can tell you right now, he don't want to serve under this president. I'll say it for a fact. And this president don't want him. Am I making that up? Absolutely not. His part, I can't prove, but you know what? I can prove what Trump thinks, right? And then people say, well, he's a Republican and Trump appointed him. The FBI, head of the FBI is a Republican and Trump hates his guts. What's that matter, right? I mean, people need to understand with Trump, he's not a party guy. This dude was an independent. He was a Democrat, and now he called himself a Republican. He don't care about the parties, bro. That's ridiculous. I mean, seriously, go learn about the guy if you plan on voting for him or whatever. But understand, I'm just taking him at his word. Why do I say that? When Jerome Powell was underneath him, and he appointed him. Yes, he appointed him. Yes, I know that, right? Look at this. Trump attacks Chair Powell. I'm not even a little bit happy with my selection of Jay. That was 2018. What's he feel like now? This is February 2nd, 2024. Trump says he would not reappoint Fed Chair Jerome Powell. And let's go ahead and listen to the man himself here.
Because Jay Powell, the Fed chairman, is talking about a soft landing. Do you believe we will see a soft landing?
Well, I think he's going to do something to probably help the Democrats. I think if he lowers interest rates, but...
Would you reappoint Jay Powell?
No, I wouldn't do that.
You wouldn't reappoint him?
No.
And so, yes, if he gets elected, Powell's gone. That's just the way it is, okay? So when I make those comments, I don't just make them off the cuff. I can't prove he's fighting for a job or he wants a job. Because Jay Powell, if somebody said in the comments, it's true. Dude's rich. Like, he don't need the job. He's got plenty of money, okay? And so, and does he need that headache of dealing with the president? He knows is going to trash him every day on Twitter if he does something wrong? Probably not. I mean, the man is, like somebody said in the comments, retirement age. But again, that's out of Trump's mouth, okay? So you heard it right there. Jay Powell ain't going to be his man, all right? Now, well, I told you we got plenty of red folder news almost every day this week. So tomorrow, you got ADP employment change, right? So we'll get to that one out. Again, many Fed speakers, and then you're going to have more PMI stuff, right? S&P Global Composite PMI Final, Services PMI Final, and then ISM Services Business Activity, new orders, and ISM Services PMI. So this is going to be definitely big, and that will come after the market opens all the PMI stuff, okay? And so that I think markets will react to that for sure. And don't forget, Jerome Powell speaks at lunchtime tomorrow. So you have a bunch of Fed speakers and then him. And so the algos will most likely react off anything he says. Today I heard, some Fed speakers saying, well, 3 rate cuts, yeah, that's a good baseline or whatever, right? And so, we'll see what they got to say. But I think that economic data is really what's going to move markets in either direction and stuff. So right now what's happening is coming in hot, right? And the market's going, oh, man, maybe that's going to hurt on rate cuts, right? And so they're trying to reprice everything down and get the rate cut scenario. We've seen it at least 10 times in the last 10 months, okay? And so, but if it comes in, as is, and then Jerome Powell says, oh, he can say stuff, oh, think we're going to be good. Maybe we start in June, or maybe we just ain't in a hurry to do it, and then the market goes crazy. You know how it goes. So anyway, hope you guys got something out of it. Please hit that like and subscribe button. Please share the video with your friends and family. Really appreciate it, and I'll see you guys later.